Now it is my pleasure to introduce our presenter, Cal Evans. Cal developed and directs Synovus Financial Corp's Market Intelligence Initiative in Columbus, Georgia. He is responsible for determining how market factors influence the strategic direction of CRE and C&I lending, and he serves as an economic advisor for the company. Prior to joining Synovus in 2008, Cal worked as a commercial real estate appraiser and private consultant in the Athens, Georgia area. Cal earned his BBA in economics in 1997 and his MBA with a dual concentration in real estate and finance in 2005, both at the University of Georgia. While completing the MBA program, Cal taught both undergraduate and graduate level finance at the Terry College of Business at UGA. He serves as a CRE market and economic advisor for several governmental real estate and educational enterprises, and is a faculty member at the Georgia Bankers Association School of Banking at the University of Georgia and the Graduate School of Banking at LSU. Cal lives in Columbus, Georgia with his wife, Ivy, daughter, Raleigh, and 2 lazy greyhounds. He is a long-suffering fan of most Atlanta sports teams and the Georgia Bulldogs. Cal, the floor is yours, sir. Thank you so much.
Okay, let me confirm that you can hear me first.
Gotcha. We got you.
Good deal. Well, I appreciate everybody tuning in today to the inaugural GSB LSU Student Faculty Alumni Webinar. That's a mouthful. I'm excited about it because I know how insightful and entertaining our faculty is, so I can't wait to hear them when it is their turn and I can sit on the bench and be entertained myself. A couple of housekeeping items. First off, on Q&A, we'll do that at the end of the talk. Just enter in your question in the Q&A box, and we'll address that at the conclusion. The deck will be emailed out by the school to participants after the presentation, and a recording of this will be available on the school's Facebook page, I believe, later this week. Lastly, I have a guest on the call who is having a birthday. Rebecca Hamilton does real estate in the Chattanooga market, which is a fantastic growth area. So happy birthday, Rebecca. And with that, I will move on. The title of this is Calibrating the CRE Compass. I think it's a great time to do it. You think about what's gone on over the past 18 to 24 months. We've seen the polls shift. We've seen trends accelerate and stop in their tracks, and we've seen a lot of turbulence. So let's look at where we are and where we've been, and also where we're going, to try to get an idea of the overall environment so we can move ahead confidently in the CRE markets. So first off, let's compare the 2008 Great Recession to the pandemic response. COVID-19 prompted a fast, broad-based policy effort. That was, very evident. You had P3 loans, you had the you had the EIDL loans, you had the CARES Act, all quickly deployed, as opposed to sort of a long, dragged out process that culminated in TARP. So it's much better received, much faster motion. Second of all, the banks were much better capitalized this time. This was really key because we were in a much stronger position, which allowed for these short-term loan deferrals, and they were vital in preventing a massive wave of distressed sales. So that worked out very well. There was no housing crisis this time, unless you consider a shortage of housing a crisis. That's the only one that we've had. We have not seen the type of widespread meltdowns in the housing market that we saw in 2008. Next, technology, 2020 versus 2008, just a totally different deal. Think about this. The iPhone came out in 2008. We'll talk a little bit about that later. Alexa was delivered in 2014. Robotics and artificial intelligence, they were there, but they weren't nearly as much of a factor of the economy as they are right now, and certainly the CRE sector. And just think about how you live your daily lives. Food delivery apps, your online grocery purchases, your buy online, pick up in store, all the things that you've become used to, they weren't a factor. So imagine life with all of that today. And lastly, this is a health crisis. And let me just hammer on that a little bit. This is not a financial crisis. And what's really different about this time as opposed to 2008 is that the issues that we've seen here have been led by a lack of supply. There has certainly been no lack of demand. So a real differentiator there. Most of our issues are on the supply side, and we will address that in pretty good detail. But before we do that, let's go back 1 year to September 2020 and just think about where we were in the 5 major food groups. So multifamily, we saw the end of rental assistance, at least in that point in time. We did have some continuance.